I've got a really interesting story to tell you today. It involves Canadian natural gas, pipelines, Meta, the giant tech company, AI, and data centers, and it all comes from this article. Basically, the story goes that Meta's trying to build a data center. They're trying to build it here in Canada, and they're teaming up with Pembina to make it happen. But it goes way beyond the front page and the headline here because this story, speculative as it might be, presents so many different opportunities for us as investors to make money off of the AI play in a way that doesn't present the same kind of risks that buying into these highly valued tech companies does. And it gives us a little bit of a blueprint for the way that these deals might go forwards in the future and the opportunity that might bring to several of our favorite stocks here on the channel. So let's talk about it. First and foremost, what exactly is happening in this deal? Now, we've got this article from Zacks Investment Research, and it offers us a couple interesting things. Specifically, and probably most important for us as investors, this is still speculation. We're still talking future tense here. This hasn't been announced. It's not already being done. But I can tell you from personal conversations I've had that the companies involved in this basically feel like it's a done deal. And the leak here that sort of went forwards doesn't seem to be by accident. Now, I'm not accusing anyone of anything, but I'm pretty confident that these companies wouldn't let this be talked about if they weren't planning on making this happen. However, because it is speculative, there might still be opportunities for us to position ourselves in the market before we price these deals in. So first and foremost, they're building this thing northeast of Edmonton, kind of the heart of refineries up here in Alberta. It's going to be a place that has a huge amount of natural gas access, already has a bunch of infrastructure, and companies like Pembina can really easily and reliably serve this data center. And basically, they're using this clean, as they say, but reliable is the most important thing, natural gas, as a consistent source of baseline power. Now, they're doing this by partnering with a couple of teams out of Calgary, Connect Core and Beacon AI, who are going to power this thing. And basically, the way that they're going to do this is they're going to deploy basically a purpose-built power generation on site that's going to take that natural gas that's readily available and convert it to electricity right there, which has been a major source of concern, I think, for a lot of people about these data centers is what kind of drag is this going to have on the local grid? We've in Alberta had brownouts over the last couple of winters, so it would be a negative thing to see some sort of serious, power drain going towards something like this. And it's been a reason that a lot of Albertans are actually a little bit opposed to projects like this. But seeing these teams on board actually gives sort of a sense of how they're going to combat this problem. Because one thing we definitely do not have a shortage of is natural gas, especially right now when we're at this point where the inventories have built way up amid utilities and the price is way down. Now, a couple other things that I think are key here is that we're also seeing this same area becoming a hub of the carbon capture program. We've seen a lot of engineering opportunities here. So there's a lot of technical know-how, but there's also a huge amount of land. There's a huge amount of construction and experience. And I think there's an opportunity to build many, many more big projects. And that's something that really, really interests me because as an investor, one project going forwards it's an opportunity for Pembina, flat out. I own Pembina stock a little bit. It's one of my sleep well at night kind of, maybe it's a little bit of a sleepy stock, but I put it in the retirement portfolio and I ignore it. I reinvest the dividends. I add a little bit on a regular basis and I ignore it. And that's exactly where Pembina shines because unlike Enbridge or TC, they have a lot less headlines going on. It's really kind of an under the radar stock. Seeing this opportunity go forwards is awesome. I mean, they're going to have a reliable source of demand for their natural gas. They're going to make a bunch of money. But the bigger thing here, like I mentioned, is, okay, well, what happens next? Because if this thing does go forwards, if the regulations are all good and it gets approved and it gets built and it comes in on budget and the natural gas source is reliable and all of the things that are expected to happen do happen, then there's going to be a line a mile long of other major data center builders, the other hyperscalers, be they anyone from Oracle to OpenAI to Google to Microsoft to Amazon, they're going to be lining up to build their own because this project comes with some key advantages. Cheap electricity, comes with lots of space and technical know-how, and it's in a nice cold location. A lot of things that make a lot of sense. And the people I talk to who are involved in trying to make this thing happen where it's happening, they are really, really bullish on the opportunity here. They think there's going to be many, many other projects. They've already had a couple of companies up here that are checking if this is a thing that should go forwards, if there's, an opportunity for them to get in on this trend. And basically what everyone's waiting on is this project to get approved. So what is it going to mean if it does get built? How is that going to change anything for us as investors? Because from a Pembina perspective, one data center that is expected to need some amount of natural gas is not going to move the needle. So what happens if you get 10? What happens if you get 20? And I think the biggest story here is consistency. And this is a thing that's going to impact not only companies like Pembina, but it's also going to impact those natural gas producers that we are so bullish here on the channel. Because the consistency of this demand is going to mean reliable revenues for companies like Pembina. It's going to mean consistent profitability. These data centers are going to need the same power, if not more. Think about what happens over time. Chips get more and more and more and more powerful, right? A computer chip from 2020 is obsolete today. So as this thing gets built and the chips then become more and more powerful, you're going to need more and more power going to it. That basically builds in a reliable base amount of demand. It also opens up new runways for companies like Tourmaline or ARC or Peyto who produce the natural gas going into these facilities, because these guys are geographically constrained. That is their number one challenge, is they can't ship enough of the stuff to major demand centers, because for a long time, the major demand for natural gas has been home heating. And while it's a great source of demand on cold winter days, it's a great source of demand on super hot summer days. Apart from that, they've struggled to have consistent, reliable results. And despite it, they are incredibly profitable and awesome companies to own. But the story with them has been things like LNG and shipping it international. And the main thing that's made LNG so profitable and so appealing to producers and to those of us who own the stocks of these producers is that same predictable, reliable demand. Because these major LNG facilities demand an exact amount every single day, regardless of what's going on. And so adding to that scaling predictable demand, we've got 2 huge LNG facilities getting built here in Canada. We've got a multitude of massive LNG facilities getting built in the United States. We've got billions of cubic feet a day worth of natural gas powered electricity generators being built down in the United States in the next couple of years. Now we're adding more Canadian data centers here in the heartland of natural gas. That's going to just be consistent, reliable demand again and again. And it's seriously, it's stacking, right? Because on top of the LNG, now we get this data center. And even if that's a small jump, well, then we get the next one and the next one and the next one. And you can see how this builds into a significant amount of revenue for this entire industry. So right now, what I think the story is, this is probably going ahead. And if it does, it will have a chain effect. And that chain effect is going to present a huge amount of runway for natural gas producers and a bunch of reliable revenues for companies like Pembina. And all of that is really exciting for us as investors. So we're going to pay attention to this story. I will let you know if I hear anything more about this, but I thought such an interesting story. The AI data center trend has been such a huge one. And honestly, you've had to pay such a high PE to get in on any of the people actually building the things. So seeing this and seeing the opportunity, kind of before the announcement here in Canada is huge. We're paying, a single digit PE for an oil and gas company. Think about an ARC, for example. We've talked about them recently. They're trading at about a 9 PE. Pembina is trading at about 15. So if you want, the upside potential from the commodity, you got opportunity. If you want the reliable, consistent dividend from a Pembina, got that opportunity. And we're going to watch and see. And in a couple of weeks or a couple of months, we're going to see a big headline hit the news. We're going to see a couple of stock prices jump upwards, and you're going to know the ball's rolling. And you should be probably pretty excited. So that's about all I have for you folks today. Let me know what you thought of that video. If you liked it, please do like it. If you like covering these Canadian topics, talking about these Canadian stocks, please do hit that subscribe button. And I hope I see you in the next one.